Today, Spotify stock is down over 5% after they announced their earnings yesterday. Let's discuss why the stock is down and if it may be an overreaction. The company released their quarterly earnings yesterday. So let's take a look at the earnings report. We can see the total monthly active users grew 20% year over year, and it's also nice to see that they grew 5% quarter over quarter. The premium subscribers, which is where most of the company's money comes from, grew 13% year over year and 4% quarter over quarter, which also looks very nice. They also generate money with ads, and the ad-supported monthly active users grew 24% because they expanded in a lot of new countries. And many new people just want to try Spotify, use their ads, but don't get a premium subscription in the beginning. But that's also good because they generate money with it. The revenue from premium users grew 22% year over year. That's strong double-digit growth, especially during a recession or with high inflation. It's great that they keep growing at this rate. I think we all have seen the quarterly earnings results from Snapchat, and that's also the ad sector, but they had way worse results. We can see ad-supported revenue grew 19% year over year and 7% quarter over quarter, which is also very strong growth. Gross profit up 12% year over year and quarter over quarter 7%. They had an operating loss, which probably is the biggest reason the stock is down. The earnings came in below expectations. And of course, especially during times of a recession, we want companies that have a positive net income. But more important than net income is free cash flow, and free cash flow is positive, which is something that I like to see. The company also mentioned that the subscribers came in 1 million ahead of guidance, which is also very good, but as I said, the gross margin came in below expectations. But that's mainly due to an unfavorable adjustment to prior period estimates for rights holder liabilities. So it's hopefully a one-time thing. And the company also says that their advertising growth had a little bit of a slowdown because of the challenging macro environment. Overall, the company is pleased with the results. And I totally understand that. I don't think the results are that bad. It looks like they keep on growing, they have their momentum, and every part of the business grows. Their premium revenue is growing, their ad-supported revenue is growing, and that's why also their total revenue is growing, and even by 21% year over year. We can see monthly active users above guidance, premium subscribers above guidance, total revenue also above guidance, but the gross margin a little bit below guidance. It's also interesting to take a look at the monthly active users and where they come from. We can see that the rest of the world definitely is growing because during the last year they expanded in those areas. North America seems to be somewhat stable. Europe is growing and Latin America is also growing, though, so they are growing in every area. That's also something I like to see. That's also the case for premium subscribers. And in the end of their earnings result, they talk a little bit about new products. They talk about podcasts because that's a very important topic for them. They can generate more ad revenue with podcasts. And they had a partnership with Barcelona. Probably everybody has heard of this before. We don't want to get too much into detail. When it comes to the outlook for Q4 2022, I personally like the outlook. They think they are adding 23 billion new monthly active users in this quarter, 7 million new net subscribers, which would be very strong growth, but they still believe to operate at a loss of 300 million euros. All in all, I have to say the company is on track. It keeps growing. They need to find a way to earn more money and to become profitable. Yes, that's definitely a thing they have to think about. But the results weren't that bad, and I think now is probably a good time to take a closer look at Spotify stock.